Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are passing the most in trade today. We'll get you expert views as to how should you be approaching the markets and your equity investments. But first up, a quick look as to how the markets are really trading as we inch closer to the day's end. Well, it was a very range bound and a narrow range in which the markets had been trading up until 1 o'clock or 1:30. But after that, we've actually seen the markets drifting lower. In fact, now the Sensex has not only breached the 63,000 mark, it's down by almost 300 points at almost 0.5% cut. It is trading at the day's low level. On the flip side, when you see the Nifty as well, that's also seeing a cut of 0.3% odd. And, you've seen the 18,700 mark also being breached on the downside, 63 points of a cut for this one. But what is the broader markets, however, still holding up into the green. So the mid caps and the small caps are up by 0.2% higher. But what's dragging the index lower today is the Nifty bank, the sharp fall there that you can see in today's trade, almost 1.2% lower in trade at the day's low. And all the constituents, the private banks, PSU banks, really contributing to this sharp fall. So over 500 points of a cut is what you can spot on the Nifty bank index. Look at the private banks, that's also slid by about 1.2% odd in today's trade. Along with the banking names, you can also see the IT sector dragging the indices lower. 0.5% of cut can actually be seen for this index as well. And apart from this, you're also seeing some of the other sectors coming into this kind of a fall. The metals are dragging a little bit lower as well. You can also see fall in the financial services space in today's trading action. The pharma space, however, is still holding up as the major gainer today's trade, 1.4% uptick coming in. So that's the one that's limiting the downside for the markets in today's trade. In terms of the stocks that are moving the markets lower, you can clearly see the banking names like IndusInd Bank, Kotak Mahindra Bank, SBI among the top 5 losers on the Nifty index, down by 1.5 to 2.5%. Hero Moto and Wipro are the other laggards at this point. The stocks that are still holding up their gains despite this overall muted trend in market. You can see Apollo Hospitals up by 4.5%, Divis Laboratories 2.5% up in trade, Dr. Reddy's, Cipla. So it's all the pharma names that's forming the top 4-5 names on the Nifty index. BPCL is also inching higher by 1.2% odd. But let's welcome our guest on the show. Mr. Avinash Gorakshakar joins in, Director Research at Profit Mart Securities. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, we had been waiting for the US Fed decisions, and that has definitely come in, mostly in line with the expectations that the pause has come in. But again, there are some confused signals because it looks like it is a hawkish pause. People are talking about 1 or 2 hikes that could be coming in despite this pause that we have seen from the US Fed. Is that the key reason why you believe that the markets are trading lower in trade, or are there other factors as well?
Sakshi, I think you rightly mentioned that the pause which was expected has come on expected line, but the commentary given by the has been slightly hawkish, and that is the reason the markets have been slightly disappointed. In fact, yesterday we saw the U.S. markets also correcting sharply. The Indian markets today have also corrected. Obviously because the fact remains that inflation in U.S. is still quite elevated at around 4%, and the comfort level for Fed is basically 2%. So there's going to be a lot of volatility and some further kind of measures taken by the Fed before we see interest rates coming down. Our sense is that looking at the kind of macro headwinds which are there in the US market, especially on the inflation side, it's quite premature to say when interest rate cuts could happen. Probably they could happen from the month of September or October. But I think inflation remains a key data point and a little monitorable and a little headache for the Fed. So probably this is the after effect of the Fed meeting, which was on expected lines, but the commentary was hawkish. And I think if you have the next, interest rate hike coming in July, which is the time Fed will have its next meeting, I think the market should definitely be a little wary of that, because this doesn't mean a complete solution to the problem. It is just a temporary pause. And obviously, if interest rates go up, then I think global markets are going to be very volatile. So I think the Indian markets have corrected slightly because of this factor. Also, the reason for the Indian markets to underperform is because of the monsoon delay. We have
Yeah.
been seeing that monsoon has been delayed. So, that is also another main trigger point which the market is awaiting.
Okay, but what about this bank Nifty and sudden this 500 point of a fall? Is that a bit of a worry?
No, I don't think so. I think looking at the bank nifty, is slightly speculative. But if you see the numbers presented by most of the PSU and the private sector banks, my feeling is that the banking stocks, both from the PSU as well as from the private banking space, had delivered stellar returns over the last 12, 15 months. So I
Yeah.
think this is a price correction which is happening, and I think there's nothing to worry. If investors have invested in the larger banks like SDFC or an Axis Bank or an ICICI Bank, because as
Hmm.
long as credit growth is 14-15%, I think the balance sheets for most of the banks would comfortably grow even in the current financial year.
Okay, but would you say that the signals that we've got from Jerome Powell this time around could stop or delay the Nifty touching all-time high levels?
Yeah, I think markets were expecting that today itself the Nifty could touch a new high. But I think normally, Sakshi, these events are not triggered in a systematic manner. I mean, you would get a high definitely, but at some point of time, maybe a little later. But I think as of now, the markets are probably in a cooling off mode, and I think the markets had run off also quite significantly. So this kind of healthy profit booking or correction is definitely a blessing in disguise for those investors who have actually not participated earlier. So I think we'll have to wait for the Nifty to make a new high, at least for the next few months.
Okay, okay. Next few months, one will have to wait for the Nifty to really make those all-time high levels as well. But another space that I wanted to discuss with you is the defense pack. Now, that's still doing well despite this overall muted trend in the markets today. This has been a developing theme. We've seen the first mutual fund getting announced off late as well, and now we are looking forward to Prime Minister Narendra Modi's visit next week to the US. We've already heard from the Defense Ministry how they are inching closer to the signing up of the drone deal with the US as well. So that could be announced formally next week too. The US and India are also likely to agree on the jointly manufactured fighter jets in India, or fighter jet engines in India, and that could fit very well in Prime Minister Modi's wider push to boost defense manufacturing locally as well. Your own thoughts on the way defense pack has been moving. Some of the stocks have already hit their 52-week highs as well. Mazagon Dock, we've seen stocks like HAL and Bharat Dynamics also touching their 52-week high levels. Your thoughts on how should one be really approaching this space, and is this the space to be?
Yeah, I think you rightly mentioned, Sakshi, that I think Prime Minister Modi's visit to the US is going to be a very important one from a defense sector point of view. A lot of new agreements and product, kind of opportunities which are going to be made in India are going to be finalized. I would believe that, I think in the defense space, if somebody wants to get an alpha, I think one has to wait for some sort of a healthy correction, because clearly, I think if you look at stocks like Hindustan Aeronautics or
Yeah.
for that reason, Bharat Dynamics, I think most of these stocks have actually given stellar returns. And now at these levels, actually, if one were to invest, I think the alpha would definitely be a little limited. Valuations are slightly stretched, but yes, I think the opportunity and the bigger headroom opportunity over the next, say, 2 to 3 years is definitely promising. So I think investors should actually wait for some time. Corrections will happen in the market and they will present opportunities. And at that point of time, defense should be a strong kind of allocation for investors. But I think at these levels, one has to be a little patient. Only on corrections one can take exposure.
So, any particular stocks that are likely to be benefiting from the deals that may get announced formally next week with Prime Minister's visit to the US?
Yeah, I think most of the public, sector companies which are in the defense space, like Hindustan Aeronautics and Bharat Electronics, are likely to be big beneficiaries, because clearly, whether it is aircraft manufacturing or whether it is electronics, I think both Bharat Electronics and Hindustan Aeronautics have a very strong expertise in these verticals. So clearly, I think I would be more, positive on these two companies. Although Bharat Dynamics would also benefit, but it is more on the artillery side. So clearly, HAL and BL could be observed, and they could possibly be, accumulated by investors on every decline.
And what about this drone manufacturer Zen Technologies? Now, this stock has also been soaring. We've been seeing multi-fold jump in the Q4 profits as well. So the earnings have supported, and with the drone opportunities now emerging, could this also be a stock on the watch list?
Yeah, definitely. See, I think the government has announced a very positive drone policy, and by virtue of that, I think investments have come in a significant way. My sense is that Zen will definitely benefit significantly, because it is one of those players which has got a healthy order book, has got a solid product kind of profile, and definitely looking at the kind of current order books and the tailwinds in the industry, they should benefit. another company which is going to go public on the 27th of this month, Sakshi, India Foil, which also manufactures drones, is going public. So I think there's going to be a lot of appetite for drone manufacturing companies also, although there are very limited choices now currently available in the listed market.
That's very true. Which are the other areas that are looking lucrative and interesting to you at this point in time in the current market setup? Where should one keep their focus?
Yeah, I think my guess is I think it's better to put your bets on sectors which offer a very good visibility. And I think automotive, auto components,
Okay.
capital goods, real estate, cement. These are pockets where I would believe that any correction in the markets happen. Then I think in the next say 12 to 15 months, these sectors offer a very good revenue as well as a earnings visibility. And I think investors should try to first look at large cap companies here. And definitely, I think if they build their portfolios based on these sectors, I think they could expect a decent risk reward in the next say 12 to 15 months.
Okay. Some other stocks that I wanted to discuss with you that are moving in trade today. Varun Beverages, for example, is trading ex-date for its 1:1 stock split. The stock definitely surged about 6-7% odd despite this muted trend in the market. We've seen your own thoughts on how the stock has performed overall, and after the split, what should one do?
No, I think the split will actually help the stock get a little better liquidity profile in the market, Sakshi. But as far as the business is concerned, I think they do maximum business in the summer season. And with the summer heat scorching, day by day, I think Varun Beverages should do exceedingly well in the coming year. Most importantly, I think this is a monopoly kind of business. They are franchisees for Pepsi. And clearly, looking at the kind of bigger opportunity in the Indian markets, I would not be surprised that after the stock goes split, you could definitely see a lot of buying coming in from smaller investors because obviously the split will subdivide the stock, and that would give a good entry point to investors. But mind you, the valuations are not cheap, so somebody who wants to take a position here has to take at least a 2 to 3 year viewpoint to get a better kind of risk reward.
Okay, understood that as well. Apart from this, we were discussing how the Nifty Bank is really cracking today, but IDFC First Bank, is at an over 6 year high. In fact, in the last 2 months alone, we've seen a very sharp move on the upside for this stock. It's zoomed 47%. The way this stock has moved at 78, 79, how does the stock really look, and does it warrant fresh investors to take a look?
Yeah, I think IDFC First got a significant boost largely because in the current financial year, not only did the net interest margins improve, the asset quality came quite well. And most importantly, their focus on the MSME, SME sector actually played out very well. And in fact, they have come out with several innovative banking products which have helped them garner a very large CASA of almost 50%. In the last few days, the stock has done very well because there have been some strong reports that Vodafone is now going to be getting a huge fund revival from their promoters. And mind you, IDFC First has got a large exposure here. So that factor has also helped the stock to get re-rated. But I think anywhere around 65 to 70, Sakshi, is yet a decent entry point for this bank. I think over the next 2 years, you could see a lot of re-rating for this bank, considering the kind of management, throughput and the kind of innovative kind of products the bank has launched.
Okay. Another stock that I wanted to discuss is from the pharma space. We've been seeing uptick coming in from the last few sessions for the pharma space, and Apollo Hospitals has in fact been performing very well in the recent past as well. In fact, brokerage firm JP Morgan has now initiated coverage on Apollo Hospitals with an overweight rating over here, and that's why we've seen the stock jump 4.5-5% today. At these levels, Apollo Hospitals, how does it look to you, and should one really look at it seriously if one wants to take exposure to the healthcare business?
Yeah, I think Apollo Hospital is clearly the market leader in the hospital space. It's one of the older players. It's got the best economics on a per bed capacity. So my sense is, post COVID, most of the hospitals have got themselves into specialized services like cardiac, heart, and which have helped them, get better margins. So I think if an investor were to look over the next say 2 years, then I think the hospital space offers a very good opportunity. And I think, stocks like Apollo Hospital, something like Fortis also could be accumulated. But I think keep a long-term time frame because valuations in the near term may look a little bit stretched, considering that there's a lot of appetite, from funds, from HNIs, in buying into these kind of hospital stocks.
Understood that. Well, thank you so much, Avinash sir, for joining us and for sharing all these insights with all our viewers. Always a pleasure having you with us on Business Today TV. Well, let's take a look at how the markets are performing as we inch closer to the day's end, about 12 minutes away from the day's close. And you can actually see about 0.4% decline for the Nifty right here, 70 odd points of a cut. But the Sensex is taking a sharper beating, half odd percent of a decline for that, 300 points down at 62,928. So the market mood looks like it is going to be ending this session on a negative note. The broader markets do offer slight respite coming in there, but overall on the benchmark level, it may be a soft or a negative close in today's trading action if the decline stays as is over the next 10 minutes. We'll keep an eye on how the markets really move from here, and you can track the same by being with us on Business Today TV. So don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. Until then, thanks for tuning in. Over the last 123 years, the Indian stock market has in fact delivered a real return of 6.6%.